Asian markets rise as investors await the inauguration of the next US President, Donald Trump. Germany faces mounting challenges as Europe's largest economy contracts for the second straight year. And we explore the economic impact of China's population decline as the nation increasingly relies on domestic consumption. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Asia-Pacific markets rose on Monday ahead of Donald Trump's inauguration as investors await greater clarity on the policies of the incoming US administration. It follows Friday's rally on Wall Street and record-breaking day in Europe, with sentiment boosted by positive talks between Donald Trump and Chinese President Xi Jinping. Hong Kong's Seng index led gains, climbing 2.2% to the highest level since December 31st, while mainland China's CSI 300 added 1.06% as China left its benchmark lending rates unchanged on Monday. On Friday in the US, all three major averages posted their first weekly gain of the new year. Markets are closed on Monday in the US. Now, even before he won the election, Trump was promising dramatic changes in US policy on everything from energy exploration and climate change to social and cultural issues. He's made it clear that he intends to change the course of the federal government. Craig Boswell looks at what the first 100 days of the second Trump presidency could bring.
Donald J. Trump!
U.S. President-elect Donald Trump has promised to enact his agenda so fast he'll make heads spin.
It is now clear that we've achieved the most incredible political thing. Look what happened. Is this crazy? Fantastic job with the
Times Person of the Year says he won't waste a second unwinding nearly every Biden administration policy possible.
On day one of my administration, I will be rescinding Crooked Joe's outrageous executive order.
Through a flurry of his own executive orders, Trump plans a massive regulatory rollback, overturning Biden clean car initiatives, bans on diversity, equity, and inclusion programs for the federal government, and ending birthright citizenship. That's the principle that says anyone born on U.S. soil is an American citizen, and it is guaranteed, though, by the U.S. Constitution.
I only want to be a dictator for one day.
Trump says pardons for the January 6th rioters will come quickly. Other proposals seemed random.
We're going to be changing the name of the Gulf of Mexico to the Gulf of America.
And he's promised to expedite fracking and oil drilling permits and tax breaks to oil, gas, and coal producers.
We're going to lower your energy costs by 50% within 1 year. We're going to drill, baby, drill. We're going to get those prices way down.
Many of Trump's priorities require congressional support, and the biggest push will be extending tax cuts passed during his first administration. They expire this year. Trump has a Republican-controlled Congress, but he had a Republican-controlled Congress during the first part of his first term, and getting legislation passed didn't always go as planned.
Trump says expect tariffs on day one and insists they'll help pay trillions of dollars in U.S. debt, though he cannot guarantee tariffs won't raise prices for American consumers. A tricky spot for a president that made the economy and ending inflation key campaign issues. Craig Boswell, TRT World, Washington.
Thank you.
Meanwhile, TikTok has begun restoring its services in the US after President-elect Donald Trump vowed to revive the app's access when he returns to power on Monday. Trump said he would issue an executive order granting the platform's China-based parent company ByteDance more time to find an approved buyer. TikTok had shut down operations on Saturday, citing a federal law requiring ByteDance to sell its US operations by January 19th. Now, as Donald Trump returns to the White House after his election victory over Joe Biden, who had defeated him in the previous presidential election in 2020. It means Biden will be consigned to history among other one-term presidents. But what legacy will he leave behind? Our North America correspondent John Brain reports.
Joseph Robinette Biden Jr. do solemnly swear
that I will faithfully execute the office of President of the United States.
the office of President of the United States.
When Joe Biden took the oath as the 46th President of the United States in January 2021, it felt like a return to normality after the chaos of the previous 4 years under Donald Trump.
So help me God.
Congratulations, Mr. President.
There were high hopes that his experience and sense of decency would lead America into better times. Despite facing a deeply divided Congress, Biden delivered on his promise to work across the aisle. He pushed through some landmark bills, including a $1 trillion infrastructure package.
He had 4 landmark pieces of legislation that were passed and signed into law, 2 with really big bipartisan majorities. And that is far and away more than any president since Lyndon Johnson has done.
But many blamed him for a stubbornly high rate of inflation, which became the most important issue for millions of people. His ventures into foreign policy were also mixed. His staunch support for Ukraine helped that country resist Russian aggression. But the chaotic withdrawal of American forces from Afghanistan and the return to power of the Taliban was seized upon by Republicans as evidence of incompetence. And he also failed to keep his own party on side. Many Democrats were angered by his continued support for Israel during the Gaza war.
Good afternoon.
Not surprisingly, he was anxious to take credit for the ceasefire agreement.
The elements of this deal were what I laid out in detail this past May, which was embraced by countries around the world and endorsed overwhelmingly by the UN Security Council.
Ultimately, though, it turned out that Joe Biden's biggest problem was one he had no control over: his age. He was the oldest ever occupant of the White House, and at times it showed. He often seemed frail physically and mentally, sometimes not quite with it.
The 46th President of the United States, Joe Biden.
It all came to a head during a disastrous presidential debate in Atlanta, when Biden completely lost his train of thought.
Dealing with everything we have to do with,
He was forced to pull out of his campaign for re-election. His replacement, Kamala Harris, led the Democrats to a crushing defeat. Critics say if Biden had quit earlier, the party would have had time to choose a more suitable candidate.
I think right now people look at him not stepping down as a real blemish on his legacy. But I think the longer we look back at him, I think that there will be less of a criticism for that particular decision and more of a focus on the longer lasting achievements that he's likely to have.
Whatever history's ultimate verdict on his presidency, it's unlikely anyone will question the commitment of a man who was a significant presence on the American political scene for half a century. John Brain, TRT World, Washington.
Now, a quick look at some of the other top business stories from around the world. US President-elect Donald Trump on Friday launched a cryptocurrency token that quickly surged in value, potentially adding millions to his net worth. The official Trump meme coin broke into the top 20 cryptocurrencies with a market cap of $14 billion, but quickly plummeted following a surprise Melania coin announcement. This latest venture follows a string of unconventional promotions by Trump, including branded Bibles, gold sneakers, and diamond-encrusted watches. South Korea's central bank has downgraded its 2025 growth. This comes after the political crisis sparked by President Yoon Suk-yeol's declaration of martial law last month. Initially, predictions saw a growth rate of 1.9%. The bank now projects a range of just 1.6 to 1.7%. The effects were already being felt in the final quarter of 2024. Australia plans to spend $1.2 billion on green aluminium. The goal is to reward smelters using renewable power instead of coal. Aluminium smelters use much more energy, about 10% of the country's electricity. Australia is the world's 6th largest producer of this in-demand metal. And Disney's Mufasa: The Lion King is back at the top of the North American box office. It raked in $15.5 million over the Martin Luther King Jr. holiday weekend. Meanwhile, Sony's One of Them Days came second with $14 million, and Universal's Wolfman took third place. China's population is in decline. A drop of almost 1.4 million people last year means it's now sitting at around 1.4 billion. And as the number of people shrinks, there could be serious impacts on China's growth outlook. Emre Boz reports.
The streets of Beijing may be buzzing, but the country has millions fewer than it did. China's population fell for the third straight year in 2024. People have become less willing to have children due to reasons like the high cost of living and the remaining effects of China's one-child policy in the 1980s. Analysts are saying this trend of declining birth rates may continue at a faster rate in the future.
At the end of the year, the national population, including the population of 31 provinces, autonomous regions, municipalities, excluding Hong Kong, Macau and Taiwan, was just over 1.4 billion, which is 1.4 million fewer than at the end of the previous year.
For China's economy, though, this presents some bad news. It may mean fewer people in the workforce. Though growing only slightly after the year 2000, the trend after 2010 is downward. By the year 2100, the number of working people in China will be 40%. For China's economic growth, this means less people contributing to production and services. A range of sectors such as healthcare, education and construction will see labor shortages. As productivity in these industries falls, so too will the country's growth. It may also mean decreased consumer demand within China. Consumer spending is at the heart of China's economic growth, with private consumption accounting for more than 39% of GDP in 2023. Another byproduct of a falling labor force may be rising wages, because as labor becomes scarce, this boosts competition for workers. This may lead to inflation as businesses pass on the cost to consumers. China just recently met its GDP growth target of 5% in 2024, after growing 5.4% in the fourth quarter of last year. But as the population declines, meeting this target may become even more difficult. Emre Boz, TRT World.
Let's get more on this now with Far Kim Beng in Kuala Lumpur. He's the founder and CEO of the Strategic Pan-Indo-Pacific Arena. Good to have you back on the programme with us, Far. Now, firstly, China hit its 5% growth target last year. How could its declining population impact its future growth?
If we were to look at the example of Japan and South Korea, the decline in population will obviously have some kind of impact on the economic trajectory and strength and resilience of the economy. Consumption will go down, maybe savings will go up. But that having been said, there are various measures of actually addressing the issue, one of which is automation. So even if you have problems that are now looking at China right now, China is also trying to source for all kinds of solutions, and that includes automation, the resort to more use of apps-driven economy, more specific and accurate algorithm, artificial intelligence. No doubt, those will actually reduce the reliance on workforce, but that also implies that China or the Chinese would have to increase their productivity to a large extent.
Right, and speaking of these labour shortages, you mentioned automation, but could we potentially see foreign workforce coming into the country?
Come again? I didn't hear you.
So you mentioned the labour shortages could potentially be filled with automation. Could we potentially see foreign workers come into the country? Could that be an option?
Foreign labourers have never been a favourite option, whether it's for China, South Korea, or even Japan. But when the circumstances actually compel all the three countries to absorb and import foreign labourers, they have never really been averse to doing that. So I wouldn't count that out as an option that China might have to enforce at some stage down the line.
All right, Fark and Beng, we will have to leave it there. Thank you very much for joining us. Now, once Germany was considered Europe's economic powerhouse, now it's weathering its biggest economic challenges in decades. Europe's largest economy has contracted for a second year, with manufacturing and workers feeling the strain. Amar Bakalolo has more.
In over a generation, Germany was the beating heart of Europe's economy, earning its reputation as the continent's manufacturing powerhouse. Known for precision engineering and iconic car brands, it symbolized strength and recovery after World War II. But today, the country is facing a different reality. The former engine of Europe now risks being labeled its sick man. Europe's biggest economy shrunk in 2023 and again in 2024, highlighting one of the most prolonged economic downturns in decades. The Federal Statistics Office recently confirmed a 0.2% contraction last year, following a 0.3% decline the year before. These back-to-back recessions has led Germany to see the highest number of corporate insolvencies since the financial crisis in 2009. In the fourth quarter of last year, more than 4,000 companies filed for bankruptcy, with almost 38,000 jobs affected, a level unseen in more than a decade. The number of bankruptcies grew 36% from the same quarter a year ago. The services sector saw the highest growth in insolvencies, up 47% year-on-year, compared with 32% in manufacturing. Germany's housing crisis shows how serious its economic problems are. High interest rates and expensive building materials have brought the construction industry practically to a halt. The car industry, another symbol of German success, is also struggling. It's been slow to switch to electric cars, and fierce competition from Chinese manufacturers has led to job losses and plant closures.
The German economy is simply not benefiting from the global economy, which is picking up. We used to always benefit greatly from this through exports. We are not seeing this at the moment. We still have problems in the energy-intensive industry. In the automobile industry, things are going badly. We are also seeing this in the service sector. Industry-related service providers, such as transport and logistics, are not doing well.
As economic woes deepen, political turmoil has followed. Snap elections are set for February 2025. Chancellor Olaf Scholz's government collapsed in December, brought about by growing discontent over the industrialization and stagnant growth. Analysts now warn of darker clouds ahead, with a potential trade war brewing between Germany and the United States. President-elect Donald Trump has pledged to impose tariffs of up to 20% of all U.S. imports, putting the German economy on track to face another year of contraction. Ömer Bakalolu, TRT World.
For more, we're joined by Ulrich Bruckner. He's a professor of European Studies at Stanford University in Berlin. Good to have you back on the programme with us. Now, firstly, what have been the key factors behind Germany's back-to-back economic contraction over these past 2 years?
Good morning. Well, when we look back what the big headlines have been in the last years, then all of this affects Germany more than many countries that are not as open and export-driven. We saw the pandemic, which broke supply chains. We saw changes in the economic competitiveness in different countries. We have the war in Ukraine, which massively affected the German economy because sanctions always work both ways. They address the one that is sanctioned, but also the consequences for Germany as a large importer of Russian gas had a major effect on inflation and on long-term the costs of energy. So there are a lot of global changes, but we are talking about capitalism, and capitalism means that what we discuss today has been discussed 25 years ago when we saw the exact same headline that Germany is the sick man of Europe, because this comes in business cycle and in waves. And we are now seeing a downturn. But what the statistics just showed is that the current recession is 0.2, 0.3. So I'm sure that a lot of countries in the world would rather like to swap places with Germany.
And Germany has been known as the manufacturing powerhouse of Europe. How do you view the future of Germany's car industry, especially with the shift to electric vehicles and increasing Chinese competition?
Well, this is also an interesting comparison with other OECD countries, like the club of the richest economies in the world, that for many years, especially at the beginning of the century, everyone was pointing fingers at Germany that we still make things, although the future is services. And the fact that we have twice as much industrial production as, for example, the United States, saved us during the financial crisis, when this was still an important factor for growth, to sell manufacturing goods to, first and foremost, China. Now, what we just heard about China is that they are not doing well, and they massively invested in modernization of a lot of their industries that they compete with Germany. So this doesn't look very rosy, because the Chinese identified electric vehicles as an important driver for the world, and the German manufacturers were sitting on a lot of patents and a lot of know-how for combustion engines and managed the turnaround later. So it's too early to tell who's going to win, but it is quite likely that other countries also want a share of the pie, and it's not a given that the rest of the world has to drive German cars.
And with snap elections approaching, how much is political instability affecting Germany's recovery?
So this is not a sign of instability. This is a sign that three parties that basically represent the same centrist view of what Germany should do highlight their differences, and these differences led to an end of this coalition. But what we see coming after the 23rd of February will not be a major change. It is a variation of the same. They adjust. And I think part of the story why the German economy is not doing so well is that the previous government wanted too much too quickly, and that created a lot of tensions, not only in the economy, but also in society. And that will see an adjustment in the political system, but it is by no means a sign that Germany is politically unstable.
Okay, Professor Ulrich Bruckner from the Stanford University in Berlin, thank you very much for your analysis.
Thanks for having me.
Last week was one of economic turbulence in the UK, with critics accusing the Labour government of mismanaging the nation's financial future. But Prime Minister Keir Starmer is pushing back with an ambitious plan, betting on artificial intelligence to transform the economy. Tulay Kalyon Haznedaroglu has more.
Chancellor to stand up there. She's coming out now. Get out of your way.
Critics say the UK Finance Minister Rachel Reeves should resign due to the current state of the economy. But the Prime Minister Keir Starmer is staying firm, insisting technology holds the key to growth and announcing Britain's plan to become an AI superpower.
Our ambition is not just to be an AI superpower, but also make sure that this benefits working people. Now, that, of course, starts with jobs and investment in every part of the country. It is important that I'm very clear that growth is our #1 priority and mission. We've said that throughout, and all of the other work we're doing ladders up to this. So whether it's the work on AI, whether it's the work I was announcing last week on the NHS.
But the race to become the world's AI superpower is an ambitious one, and many are asking, what's the actual plan? 3 tech companies have committed to a $17 billion investment in the UK's AI infrastructure. The International Monetary Fund estimates AI could add up to $57 billion annually to the UK economy over the next decade. 13,250 jobs will be created to support the AI action plan. New AI growth zones around Britain are also announced to help speed up planning approvals for data centres. The UK is the world's 6th largest economy, but in artificial intelligence investments and patents, it's trailing right behind the US and China in 3rd place. But the UK isn't just trying to catch up, it wants to lead the charge in shaping the future of AI. Yet the opposition remains sceptical, claiming the plan lacks inspiration and may leave Britain behind. But only time will tell who will come out on top in the tech race. Tülay Kalyon, Haznedaroğlu, TRT World, London.
Well, that's all your business news for now. Thanks for watching. Next Tech is next.